Hey guys, this is Rudy or Mr. Oxy, or call me whatever you'd like, especially on a day like today. You just see a whole sea of red all across our positions in the marketplace. So we're going to explore 5 energy stocks today, but maybe before I get into the energy stocks that I want to talk to you about, I should just say a special word of thanks to the people who helped to tank the market. So that'd be special thanks to Jerome Powell, Janet Yellen, Joe Biden. Uh, but really, if you think about it objectively, rationally, logically, you go like, the market's on sale, may as well buy some. So today I actually did execute a few transactions and went long on a couple of stocks. In fact, I even added to positions I already have, like Energy Transfer and ICANN. So IEP is my ICANN holding. So I added a little bit to that. What I do want to do, though, on a more sort of serious note, is say a word of thanks to Bulldogs number one, who initially drew my attention to Energy Partners. And that was a kind thing for you to do, Bulldogs number one, because after about a month or so after you had drawn my attention to Energy Partners, I opened a position in Energy Partners, and I've added to it a couple of times since, including today. So I actually added a chunk of Energy Power Transfer to my existing position just today because it was on sale. So why not? What I want to do is talk about 5 different energy stocks. 3 of them are in my long portfolio: Enbridge, Occidental, and Energy Transfer. 2 of them are not, ConocoPhillips and Schlumberger. And I thought what I would do is, to start with, let's just quickly do a comparison in terms of what these companies actually are and where it is that they do business. So I've put the 5 of them across the top of the screen as a header because I'm going to probably, I think I have the slides sort of in the same order. In fact, I know I do. Every single slide. What I did on the first slide, though, it says price information, but I figured, you know what? Don't worry about the price. I mean, today the price was down 3, 4, 5%, whatever the case might be on your energy stocks. That's not too important on a day-to-day basis. And that's not the underlying reason or thesis for why you would invest in them in the first place. But let's quickly sort of compare these 5 companies. ConocoPhillips and Occidental Petroleum are most alike. They are integrated oil and gas companies involved in the entire value chain of the oil business. Schlumberger is a little different. One of the members of our community, Darius, actually mentioned Schlumberger in a couple of notes and posts to me. So I thought, you know what, I haven't looked at Schlumberger for a long, long time. In fact, the first time I met with them physically, personally, was around about 2012 or so. So it's, almost 10 years ago. They are located in Houston, Texas, in a beautiful area called Sugar Land. And I met with them a couple of times for business, but I never actually explored them from an investment point of view as a potential long or something that I would buy into. Schlumberger is a field services company, which refers to all the products and services associated with oil and gas exploration and production processes. These are commonly what we refer to as the upstream company. So Schlumberger is an upstream company, whereas ConocoPhillips and Occidental are integrated oil and gas companies. Enbridge, right here at the bottom of the screen, it says production and pipeline. And then Energy Transfer is also production and pipeline, but it is an MLP, a master limited partnership, or MLP, are business ventures that exist in the form of a publicly traded partnership. A limited partnership, they combine tax benefits of a private partnerships because the profits are taxed only when investors receive distributions, with the liquidity of a publicly traded company. So it trades on the NYSE as any other stock does, but I am, for clarity purposes, invested in Energy Transfer Master Limited Partnership. A little bit about Enbridge, in case you don't know the company. Enbridge is one of those energy companies that I'm invested in, and people have said to me, Mr. Oxy, why Enbridge? Enbridge operates across North America, and there's green block fueling the economy and people's quality of life. That's kind of like a typical motherhood statement, but what do? They move about 25% of the crude oil produced in North America because they own all the pipes. We transport nearly 20% of natural gas consumed in the United States. So that's 2 legs of a 3-legged stool. And this is the third one, which is really important to me anyway, as an investor. It's part of my thesis. We operate North America's 3rd largest natural gas utility. by consumer count. What they mean by saying that is that Enbridge is actually the natural gas utility for all of Ontario in Canada, which is probably more than a third of the entire Canada population. So approximately 10, 11, 12 million people in Ontario, Canada rely on Enbridge for heating and cooling their homes and for cooking and other things that they need natural gas for. So that is Enbridge. It's a three-legged stool in terms of the bulk of their revenue. And those are the three main reasons why I'm invested in Enbridge. Enbridge was an early investor in renewable energy, and we have growing offshore wind portfolios, blah, blah, blah. They have to do that anyway, because otherwise it can't get any government subsidies. So let's take another look at the five of them in a row. So weighted alpha. So weighted alpha is a little bit different to seeking alpha, and I'm not talking about the people who write for a penny a click on your favorite blog site. I'm talking about weighted alpha as a technical term. Barchart.com, which is where I get this information from in the background, takes this alpha, which is a measure of how much the stock has changed in the 1 year period, and weights it. The weighted alpha is a measure of 1 year growth with an emphasis on the most recent price activity. So because it's weighted, it skews the number a little bit. So if you look at weighted alpha as opposed to just alpha, you can see that Conoco plus 42 compared to Enbridge is only plus 25. Energy Transfer is almost plus 50. Oxy is plus 50. But look at Schlumberger plus 98 on a weighted alpha basis. Remember that weighted alpha checks the 1 year growth, but the emphasis is on the most recent price activity. In the same sequence, if we look at the performance of these five stocks, one versus the other, Conoco over 3 months is up 16%, Enbridge 10%, Energy Transfer 44%. Thanks again, Bulldogs number one. Oxy only 0.2. That's because it tanked so severely as Carl Icahn started selling his stock. And yesterday, if you followed my video that I just posted the day before, you would know that Dodge and Cox actually sold $3.1 billion of Occidental. And between Carl Icahn's $2.3 billion and Dodge and Cox's $3.1 billion, that's almost $5 billion that caused a lot of downward pressure on the stock. Schlumberger up 24% over the last 3 months. But if your horizon or your time horizon is a little longer, we look at ConocoPhillips up 42% over 6 months, Enbridge 31%, Energy Transfer 65%, Oxy 90%, 90, and Schlumberger 60%. So if you've been in Oxy for a year or longer, as I have, you are sitting on a reasonably good gain. And even with the price today closing at around $25, you are probably in the money. Look at the key statistics. The companies comparatively, ConocoPhillips has a $77 billion market cap and Occidental only 24. But if you look at the annual sales, you can see that the numbers are not that different, because the ConocoPhillips annual sales is around 20 billion compared to Occidental's almost 18 billion. So there's a huge delta between the market cap of the two companies, yet their sales are quite similar. Now, why would that be, Mr. Oxy? Well, look at the screw up that Oxy has done here on the annual net income. They generated almost $18 billion in sales with an annual net income of negative almost $15 billion. That is what they are busy addressing and fixing right now. That's one of the reasons, if not one of the primary reasons, along with debt, why that picture looks so horribly bad. In addition to the fact that Occidental's carrying a lot of debt, they're also carrying expensive debt, including Carl Icahn's 8%, Warren Buffett's 8% preferred coupon, which is quite expensive considering at what rates you can borrow money today, since Jerome Powell is still printing it relatively for free. 60-month beta, around 2, 1, 2.5, 2.4, 2.4. So all the same, with the exception of Enbridge. Beta in terms of measurement is how volatile the stock is compared to the rest of the market. Enbridge is around 1 to 1. All the others are 2 times more volatile than the market or greater. Most recent earnings, of course, is another reason why Occidental is lagging. 69 cents for ConocoPhillips, 81 cents for Enbridge. They both beat. Energy Transfer, easy beat at $1.21. Oxy, very, very comfortable beat. Actually, a very, very good quarter at negative 15 cents, but it's a negative. and then Schlumberger 21 cents. Not too bad. If we look at the chart over 6 months that I just mentioned, so in this particular instance, they are color-coded. So Conoco is in light gray, Enbridge is in blue, Energy Transfer is in orangey, and Occidental is the sort of purpley color, and Schlumberger is green. You can see all four of them kind of follow the same trajectory on a chart, but look at Occidental of the last 6 months, it has certainly outperformed these other four peer companies. A quick look at tip ranks. So the analyst target average for ConocoPhillips, $67.64, offering you a 20% upside. And by the way, it's also a strong buy, so I'm skipping over it too fast here. 14 analysts say buy, 0 hold, 0 sell. You look at Enbridge, it's got a price target of $45 with a 20% upside, approximately 7 buys and 1 hold, also rated a strong buy. You look at Energy Transfer, a 26% upside, average target price around $12.75. It was trading at around $10 today when I snagged myself some more. 8 buys, no holds, no sells, strong buy. Occidental, price target average $30, 18% upside. Occidental should be okay. I think Occidental can blow through $30 quite easily. Just needs to get out of the slump that it's in right now. The analysts are mixed on this one, 6 buys, 9 holds, 2 sells, and the average consensus is a hold. Schlumberger is rated a strong buy with 11 buys, 0 holds, 0 sells, and only a 3.4% upside if you take the average analyst price target at $33.45 compared with where it is trading today. So it's actually trading in that range. What I wanted to share with you quickly in closing is you can go to McKinsey & Company. McKinsey is a very well-known consulting firm globally. They do great work. They have a section called Oil and Gas and Insights that you can subscribe to. So this particular paper that I pulled up is a little bit out of date because in February 26, people were still very concerned and confused about COVID-19. You know, are we all going to die? Will it help if I wear a mask? Can I get vaccinated? Are the vaccines going to kill me or heal me or prevent me from getting sick? You know, all those things were still happening in February, and obviously now we've moved on a few months and we have a little bit more and better intelligence than what we had 3 or 4 months ago. But COVID-19 sent shockwaves through the global oil markets, with oil demand and supply struggling to return to its pre-pandemic levels. You can pull up this paper if you're interested. Go to McKinsey & Company and look for the global oil supply and demand outlook to 2040. How do they do it? You know, so this is really interesting stuff if you've never seen this before. So Permian Basin activity monitoring, this is just one slide or snapshot of how McKinsey actually extracts information that they can report back on a consulting basis. Now, you also need to take into consideration that this is a little bit sort of rear view mirror type consulting, because you are more likely to be tapping into what happened before, as opposed to, from a consulting point of view, suggesting what might happen going forward. But anyway, from a macro point of view, this is time well spent just to look at some of these things. They say we can monitor unconventional exploration and production activity in the Permian Basin in near real time by combining publicly available data with proprietary satellite imagery and advanced analytics. Cool, huh? So on the macro side, and I'm nearly done over here, just 5 things that they sort of highlight. They say the demand recovery to 2019 levels is in sight. That's good news. Oil capital expenditures are unlikely to fully recover. I think we know that by now. There's more likely to be, especially in the near term, a little bit of under spending. You know, everybody's cut the capital expenditures. I'm not too sure about unlikely to fully recover, because then the next question is when. Long-term oil demand, subject to large variations across all scenarios. I mean, that it's exposed, right? So we know that too. I mean, if there's a resurgence of COVID, like the news we get out of India, it impacts obviously everything that is related to energy and oil. 38 million barrels per day of new oil drilling is needed to meet the demand by 2040. That's good news, because obviously that means that there's going to be increased demand. And when there's increased demand, that means by the nature of the supply and demand curve that there's not enough supply, which typically drives up prices. But who knows, right? Even in an accelerated energy transition scenario, we see need for new oil drilling by 2040. Good news too, right? So guys, on that note, I'm going to wrap up this video. And what I wanted to do was just sort of give you a flyover of these 5 stocks. And as I said, 3 of them are in my portfolio and 2 of them are not. You may be invested in ConocoPhillips and Schlumberger. Either way, let me know in the comments what you think. Let me know what you think of all 5 of them. As I said, I added to my position on energy transfer today. I know Bulldogs will probably say, good job, Mr. Oxy, but hey, the rest of you might have said, or might say, there are other things that you can buy or better things that you can invest in. Either way, I look forward to your comments, and let's get the conversation going and see if we can help each other to build a strong community of like-minded investors investing for generational wealth for the long term. Thanks for watching. If you like the video, subscribe, and I'll see you guys soon. Stay safe. Bye-bye.